Thank you for joining me. I'm Alex, and I want to talk about Target because Target is another one of the companies that really shouldn't be affected by the current situation, but the stock price is still down significantly, and I figure it would be a good time to have a look and see if it's a bargain or a decent buy or whatever. So what they do is retail. They have a lot of curbside pickup options as well, especially in these times. But they came prepared because they have been working on that for a couple of years, or rather they have done it for a year or so. And so obviously they're one of the main benefactors in the retail space from the current situations. Current price is $94.74, which gives the market cap of $47 billion. And current dividend yield 2.75% with a 41% payout ratio, which is pretty nice. Obviously, dividend yield depends on the stock price, which has come down, so the dividend yield is quite decent. Obviously, there's many companies right now that have taken a nosedive and they have a really nice dividend yield. But Target is one of the more safe companies out there, and 2.75% is really nice for a company that's this safe. Revenue $78 billion, earnings $3.3 billion, which gives them PE of 15-ish, and a forward PE of 14. So obviously slight improvement there over the next year, but nothing significantly. And it's just one of those that has a pretty steady income and it's going pretty steadily, and they're not trying to make huge moves upward, obviously. So growth is good, obviously, and even the 10% growth here, pretty nice for a company, again, that is this safe. Total assets $42.8 billion, total liabilities $30.9 billion, which gives them total stockholders' equity of $11.8 billion, which is slightly up from the previous year. So pretty much everything going in the right direction, even before the current situation. And I assume that they're not suffering like many others are because of what's happening right now around the globe. And so for that reason alone, I think that right now would be a pretty good time to buy. Obviously, do your own research, look at the risk factors. But I don't really think that there's any new risk factors over the past 5 years or so, because Amazon has failed to kill Target, and they're still competing with everything that's been around for the past 30 years. So you have obviously Harps, Walmart, Whole Foods. All of those have been around and nothing has changed really. So I don't think that there's any new risk factors, and I think that they're dealing with Amazon quite well right now. And so again, very safe. I don't see any new risks. Balance sheet is pretty decent. Yeah. So for a growth investor, definitely not the stock for you. Many opportunities out there, obviously. For a dividend investor, I think the dividend is, on the whole, fairly low for a dividend stock. But with the safety of principle that you have here, and with no one knowing how long the current situation is going to go on for and how many companies are going to have to go broke, I think that this is a pretty nice dividend considering. And so I think it's a pretty good stock to buy, even for a fairly big investment. And for a value investor, the PE is nice, the balance sheet is okay, the dividend is nice, there is growth. And so overall, I would say that this would be a pretty decent buy for a value investor as well, and again, even for a relatively big investment. So you should look into this, do your own research, look at the risk factors, look at the 10Ks, but overall I would say that even in the current times, and especially in the current times, and with the stock coming down quite significantly, I think that this is a pretty decent buy. That's it for me for today. If you like this video, make sure to subscribe. I'm coming out with more videos every day before market open. I hope you have a successful day.